Hey traders, welcome back to this week's weekly Forex forecast. I'm going to show you in today's video the number one currency that I think offers the best opportunity for profit coming up next week. And it's to the short side, and its recent weakness has really been something to behold, especially relative to the other currencies. Before we go into that, I want to just have a quick look at the dollar. We had the major breakout of the US dollar. We consolidated and then broke through it as we were discussing previously in videos before Christmas. And we're sitting here now just above it. Coming up next week, we've got the BOJ on Friday, and they are expected to hike rates by 25 basis points. If they do that, this is not just going to affect the Japanese yen, it's going to affect the US dollar, because as the Japanese yen rallies and we see money being repatriated back into the yen, we tend to see the money coming out of the US dollar. So it wouldn't surprise me if we get, pretty choppy markets leading into Friday in all of Forex, not just the dollar and the Japanese yen pairs. And then on Friday, I wouldn't be surprised to see a hike from the BOJ, the Japanese yen strengthen, and I think that could kickstart the dollar back to retest the breakout level. But in my opinion, just a retest, because crude oil breaking out, nat gas breaking out is suggesting that the dollar still has further to go to the upside this year. Okay, so looking at the portfolio selection coming into this week, and it is still the US dollar that is my favorite long theme heading into this week. And you might say, well, you just said you think the US dollar is going to come down maybe and retest the lower bound. That's once we, or if we get a rate hike on Friday as expected and we see the yen rally. Before Friday, I think the dollar is probably just going to chop around. You see this into interest rate decisions, and when the dollar chops around, especially with FOMC, you tend to see all the Forex markets kind of ranging, which is great if you're fading things. So next week could actually be a very good week in the lead up to the BOJ for fading strategies, as we employ with GMT members. And this means that coming into Friday, that is really where we're probably going to want to be out of any short-term trades, because that's when things start to get volatile. We can sidestep it because we know the catalyst is coming up, and then we come back in next week after the volatility, after the momentum, and we can start to take short-term trades again. So that's really the plan for me coming into this week. Alongside the US dollar, the Japanese yen is now the second long theme to the upside that I like, and that's sitting here in the quantitative metrics. And interestingly, we don't very often see the US dollar and the Japanese yen at the very top unless we've got some kind of deflationary scenario, and that's actually very negative for equities. But this is just in the lead up to, the BOJ on Friday. So I wouldn't read too much into it yet. We really need to see what that decision is on Friday, and we'll have more information really on that in next week's video on the Saturday. The third and final currency I like to the upside next week is still the Canadian dollar. It's coming off a little bit. Its recent strength has faded somewhat, relatively speaking, but the crude oil price is still pushing higher. And this is supportive, even if it's pulling back a bit, of the Canadian dollar vis-a-vis the other currencies. So those are the three currencies I like to the long side. And the currency which I think actually offers the best opportunity coming up this week and even next week is the one to the short side, which is the pound. The pound is very, very, very weak. We've had an onslaught of negative data out of the UK. And even last week, it really struggled to bounce. I mean, prior to last week, it didn't bounce. Last week, it really struggled to bounce. It just about bounced, kind of towards the end of the week, but it's showing severe relative weakness. So pound shorts are actually my number one theme heading into next week. So I like pound to the short side, and we're also going to be looking at the other EU majors to the short side. They tend to underperform in kind of inflationary risk-off regimes, which we're kind of in at the moment, especially with commodities like nat gas, even copper starting to perform, and crude oil pushing higher. So we'll also be looking at the Swiss franc and the euro to the short side. So that leaves us with, this week, we're going to be looking at pound dollar to the downside, US dollar franc to the upside, euro dollar to the downside. We're also going to be looking at pound yen to the downside, franc yen to the downside, euro yen to the downside, and we'll also look at euro CAD to the downside, CAD franc to the upside, and we'll be looking at pound CAD to the downside this week. Okay, so kicking off the watch list as we always do with crude oil. Now, crude oil is actually a good asset to be looking at trading next week. I can only be a buyer, cannot short crude oil. This is a long or do nothing for me. Selling is not an option. And for those of you new to the channel, very simply put, this is the sell zone each week. This is the buy zone. But if we've got a strong market, if I'm only a buyer, then I'm not looking to short from the upper bounds. The first range here is the overbought and oversold levels for this week. They reset every single week. And the gold levels are extremely overbought once we breach these, and extremely oversold during the week. And these are the levels that I'm personally looking to fade momentum from, to take the other side of that momentum. And these are the setups that we take in real time with GMT members. Last week, I posted 5 Forex trades. 3 of them were winners. One of them was just over break even, and one of them was just under break even. We also had an equity trade in there last week. So coming into this week, what I'm looking for in crude oil, I can only be a buyer. I'm looking for this to come down, take out the 74, 77, because that's when a strong market, which I'm only looking to buy, can start to turn during the week. We're basically in the kind of dip buying territory. So below 74.77, crude oil becomes oversold during the week. This is where I'm going to drop down. I'm going to start to look for those bearish reversal patterns for a 1 or 2 day liquidation back inside the range, or if it's very deep, it might just pull back and retest the underside of the range. But a 1 or 2 day liquidation to the upside is what I'll be looking for in crude oil below 74.77. If we come all the way down, take out the second lower bound at the 71.51. Now this is where we become extremely oversold. This is not expected to happen. Very rarely does this happen, maybe only 5% of the time, in terms of expectancy. But if it does, especially if you're on the wrong side, of a long position and it comes down to here, this is a great place. This is where I take a second position, and I don't increase the size. I just take exactly the same size as the first position, and I'm looking for a bounce again for 1 or 2 days. And usually if I'm already long from down here somewhere, then I'm using this to minimize the loss, or I'm using this to scratch for break even, which is exactly what we did last week on at least 2 of the setups, if not 3 of the setups, in fact, that were posted out to members. So looking for those 2 opportunities this week. You can also look for a break back down below the moving average and look for that bull flag setup. So you start to make your way down towards the lower bound. This corrects, and then you get that reversal back above the moving average, and it should be clear. You should be able to see the reversal like this. You shouldn't have to squint. If you have to squint and say, is this a break back above the moving average? It probably isn't one. Okay, it needs to be clear. Pulls back, and that first test of the moving average is the opportunity for that bull flag setup, if you like that, into the upper bound here at the 81.30. So those are 3 things you can be looking for next week, but primarily I like to see these markets come down, dip below the oversold or even extremely oversold levels if I'm not already involved. Great initial entries can be taken from here as well if you're not already involved with a long or short position. Now, the other thing to bear in mind is when you get news catalysts, these are the rare occasions when you can push into the upper and lower bounds. So I would not be surprised to see the yen pairs taking out their gold levels next week after the BOJ. And that's one of the reasons why I want to be in and out of these markets before Friday's volatility, kicks in. If that's going to be the case, we're going to see a hike. And so bear that in mind if you are trading the yen pairs and any of the Forex markets next week, because again, the dollar will probably get volatile on Friday as well. Okay, so kicking off the Forex universe with my favorite setup next week, which is pound dollar. Pound dollar is definitely something I want to be looking at to the short side. And the pound is my number 1 long theme to the short side, not just to the short side, but overall it's my number 1 long theme next week, because relatively speaking, it's just majorly underperforming coming off the back of all that negative data. So I really, really like pound shorts more than anything next week. And what I like about the setup next week with the BOJ on Friday is, again, the yen pairs are unlikely to do much. They're going to chop around. So if they take out upper or lower bounds next week, they're probably going to revert back inside the range because traders aren't going to want to put big money in before Friday's BOJ. Now, that's also going to cause the same effect most likely on the dollar. Not guaranteed. Nothing's guaranteed in trading, but most likely we could assess that as being the case in the dollar. So the upper and lower bounds of these assets should hold pretty well throughout the week all the way into Friday next week. And then you could see some of them go to their second upper bounds. So what I want to see here in pound dollar is the following. I want to see pound dollar pull back. I do think this probably needs a bounce. It is a little bit overstretched, but if we can pull back and take out the 1.23357, this is where we enter the sell zone next week, and there's a prior low right in here. So whenever we enter this kind of sell zone or buy zone, I start to look, where is the nearest support? Where's the nearest resistance? Where are we going to get double top patterns, head and shoulder patterns? Where are buyers making a mistake? In other words, trying to go long in this sell zone, and then they liquidate their positions, and that's what causes the sell-off from these areas. So a good place to identify next week would be this prior low. If we can break in and start to lack momentum trading into this prior low, this is going to be a great setup, because not only do we have a weak market, we then turn overbought during the week, and at the same time we trade into a prior low. This is a great area to start to look for a reversal for 1 or 2 days to the downside next week in pound dollar. If we blast all the way through, I think this is highly, highly unlikely because the BOJ should cap these for next week. But in the event it happens, whether I'm short already or not, above the 1.25034 is where we turn extremely overbought on the pound next week. This is where I'd be looking for a short as well, whether I'm short already from here and risk managing a losing position or not. But think about this, if it takes out that level, that's a major trend reversal. What's going to cause a major trend reversal? Normally you need a catalyst, and the catalyst has been the opposite for the pound pairs. You know, this is really being catalyzed to the downside with weak data. So the third and final thing is you can look for that break back above. Maybe it hits this high, doesn't take out the upper bound, and then you get the reversal back below the moving average, and you get that kind of bear flag set up into the lower bound next week. Great profit taking target to the short side at the 1.20003. Next is US dollar Swiss franc. I'd like to see the US dollar Swiss franc come down and take out the 0.9053. This is where we enter the buy zone. We turn oversold during the week. And especially if it can come down, take out this low. And there's a prior high here also. In fact, this is the prior high that this low tested. So if we come down and we start to trade into this area, this is where I'm going to be looking primarily for a 1 or 2 day reversal back inside the range, or at least to the upside. If we drop down and we end up taking out, and again, the gold levels are kind of a backup plan. They're more of a plan B. We don't really expect them to be taken out. But if we get some kind of unforeseen catalyst and this ends up taking out the 0.8957, whether I'm long already or not, I'm going to be looking for a second opportunity for a 1 or 2 day reversal to the upside from below this level. And the third and final thing, as always, you can look again, maybe we come down, we take out this low and we just kind of stall out. We don't actually take out the lower bound, and then you get the reversal. You get that momentum back in the direction of the trend. It pulls back, hugs the moving average, and then you can look for that bull flag setup. And the profit taking target to the upside for any intra-week longs in US dollar Swiss franc is the 0.92448. And the final dollar pair is euro dollar. Now we cover euro dollar every week, but this week I actually do like it as one of the best opportunities to the short side. So very much like the other pairs, I'd like to see euro dollar come back, take out the 1.0400. This is where we enter the sell zone. And if we can take out these prior highs, that is going to be a great setup because now we're in the sell zone. So the odds are weighted for downside once you enter this area next week. We've taken out resistance. So again, you've got confluence, another factor which can see longs liquidate their positions and cause a reversal. And the third and final thing is you've got the BOJ on Friday, which should also cause a lack of direction in any movement above the 1.0400 in euro dollar next week. So I'm going to be looking for this setup, and again I'm going to be looking, as always, trying to capture 1 or 2 days liquidation, 1 or 2 days worth of movement out of 5. That's really my goal per asset. If we can breach this and we take out the 1.05291, maybe it happens on the BOJ event if we get a lot of volatility from a rate hike, but I don't think it's going to happen before that. Very, very, very unlikely. If so, though, if we take this out, you know, maybe I sidestep this and we take out this level and there's an opportunity on Friday for a short. Above the 1.0529 is the second place I'd be looking for a 1 or 2 day reversal. And as always, you can look for, again, maybe we just fail at this high. We get a break back down below the moving average, and you get that bear flag set up in this case down to profit taking target next week for euro dollar is the 1.0142. Okay, so moving on to the yen pairs, and I can only be short pound yen or do nothing. I cannot buy this, especially, you know, if you get involved and stuck in one of these pairs into BOJ, you probably want to be on the long side of the Japanese yen if they're going to hike rates. However, if they fail to hike rates, of course, you know, this is always the risk of taking trades into and during those events, is if they fail to hike rates and it's expected, then you're going to see the opposite. You're going to see a bigger sell-off in the yen and you're going to see a dollar rally. But that's if they fail to raise rates. That's why, generally speaking, I prefer for short-term trading just to sidestep those events, come back in afterwards. So if I can be in and out of the yen pairs before Friday, as they kind of hold their ranges and chop around, that's going to be the best opportunity, in my opinion, for short-term trading. What I'd like to see is I'd like to see pound yen come back and breach and trade above the 193.45. That is where we enter the sell zone. And if we do that on Monday or Tuesday, we should be rolling over Wednesday, Thursday into Friday back inside the range, because who's going to want to put a huge amount of money into this before the BOJ? They're going to wait, and then all the algorithms kick in, you know, especially the big money traders, all the algorithms kick in on the actual headlines. They scan, you know, all the release and everything, and then they automatically take the positions on the event itself. So it's unlikely we're going to see any big money coming into these pairs before Friday, and that sets up really nice mean reversion or kind of fading strategies back inside the range for next week before Friday. So if we do take out the 193.45, I'm going to be looking for momentum to fade. I'm going to be looking for those bearish reversal patterns for a 1 or 2 day sell-off before Friday into Friday's BOJ. If we blast through here, and this is basically only going to happen on the BOJ itself, and even then it might not happen. It doesn't always happen, but once you get that kind of CPI or you get a kind of interest rate decision, then you can, and often, I wouldn't be surprised at all to see the gold levels taken out. So if we blast through, take out the gold level, this would be the second place. I'd be looking for a 1 or 2 day reversal to the downside. And the third and final thing is, if we break above the moving average and we kind of struggle, you can look for that breakout intra-week. The moving average follows it. However, looking for a breakout in the yen pairs, and the profit taking target to the downside is the 186.94. Looking for breakout trades during a week where you have an interest rate decision coming up is not always a great strategy, because if the market's choppy and it's going to chop around into the BOJ on Friday, then breakout trades could actually struggle. You could get chopped to pieces. That's why mean reversion, fading strategies actually work better in those kind of interest rate decision week. And generally they work better in Forex anyway, because Forex is a low volatility choppy asset class. So that's what I see in pound yen. Next is franc yen. Again, I can either be short or do nothing. Buying this is not an option. And I would, just as with the other yen pairs, like to be in and out of these before Friday. If we breach the 173.00, this is where we enter the sell zone, and there's a prior high right here. I love these setups, because then we enter an area where the odds are that we start to roll over or run out of steam, and we trade into a prior resistance area. This is where I'm going to be looking for those double tops, head and shoulder reversal patterns for 1 or 2 day reversal back inside the range. If we blast through here, and again, unlikely to happen unless the BOJ or until the BOJ makes its decision on Friday, the second place for a potential short would be above the 175.17. So, maybe they fail to raise rates and we see the yen sell off hard and we start to take out the gold levels. We could still look to fade that from above that area, because we're extremely overbought. It should still pause for a day, 1 to 3 days before moving higher. So those are the two setups that I'd be looking for, preferably, the first upper bound in and out before Friday. And the third and final thing, as always, but I'm not sure I'd recommend it next week with the BOJ on Friday, but normally, those kind of bear flag setups during the week down to the lower bounds. But this is probably going to be choppy, so breakout trades next week, probably not a great idea in these pairs. And the final yen pair I like is euro yen. Again, I can either be short or do nothing. I cannot buy, and again, I want to be in and out before Friday. We have a high. It's not quite in the sell zone, but it's just before it. And there is one just here as well. So again, if we push into here, this is going to be a great place, taking out these prior highs, to start to look for momentum to fade and to look for buyers to pull their positions. You get that reversal to the downside, 1 or 2 day liquidation. If we blast through here, which would probably, again, only be on BOJ, this is a second place you could theoretically look for a short position above the 165.38. Again, am I going to do that? Probably not. If I can be short, take 1 or 2 days out of this before Friday, I'm not going to be looking at the yen pairs again till next Monday, right? Or next Saturday. So I'm not really looking for opportunities above there, but, if you're involved in a short and you get stuck in it, that would be a great place to cost average the position, look for the reversal. Third and final thing, but again, next week, probably not a great idea, is the bear flag setup, where it rolls over, pulls back into the moving average, and then moves away. Down to, in this case, profit taking target to the downside is 158.08. Maybe that happens on the actual interest rate decision itself. So it does nothing. You get the market doing this, and then you get the sell-off on Friday. Okay, the moving average follows it. Then, post BOJ, Friday into Monday, that would actually be a pretty good setup to the downside if you could get it. Okay, so wrapping up the Forex universe with the CAD pairs before we move on to gold and silver, starting with my favorite of the CAD pairs, of course, is pound CAD to the short side. So I can either be short or do nothing. Buying this market is not an option for me, and I really like this setup heading into next week along with the rest of the pound pairs, because we have this opportunity where if we enter the sell zone, we become overbought during the week. The odds immediately start to turn in our favor for a pause or reversal to the downside. But we also have what's called a stair step in this scenario, where price breaks through a support, turns back, stair steps as resistance, and then you tend to get a move away again. And you can see the prior low is right here. So if we trade into this area, this is going to be a great place to start to look for momentum to fade, look for those bearish reversal patterns for a 1 or 2 day liquidation. If we end up coming through, as unexpected as it is, and I don't expect this to happen, but if in the event we do trade above the 1.80214, whether I'm short from somewhere in this area or not, this would be the second place I'd start to look for momentum to fade and a 1 or 2 day liquidation. And the third and final thing with the CAD pairs, I mean, again, if you're going to trade breakout strategies you really want, and fading strategies and mean reversion strategies in Forex are better anyway. They will outperform. But if you're trading breakouts, then you really want the strongest or the weakest currencies, and pound, CAD, pound dollar to the downside, pound yen, you know, the pound short ones would be the best ones for that. So if we start to push towards the upper bound, but instead reactively you break down below the moving average, you turn back into it, that sets up your bear flag opportunity into the lower bound. In this case is, and the profit taking target, prior low over here as well, at the 1.74208. Next is CAD franc. I can either be a buyer or do nothing. Cannot short this market next week. So I personally want to see CAD franc coming down and taking out the 0.6246. This is where we enter the buy zone next week. This is where we start to have the odds turn in our favor for a reversal. And there's a really nice 4-hour low right here. So if we can trade through here, take out this support, this is where I'm going to start to see if we can fail. Look for those bullish reversal patterns in this case. Again, very simple patterns. You probably know them, such as double bottom, you know, inverse head and shoulders. Very, very simple stuff. No one's trying to reinvent the wheel here. We just want to know, when are sellers getting stuck? When are they getting trapped? So we can take the other side of that liquidation. The second thing is, if we break all the way down and we take out the 0.6176, the implications of this would be a major trend reversal to the downside. So again, it's not expected to happen. We don't really have any catalyst for this pair next week. But if in the event that did, on an unexpected catalyst, because sometimes things come up unexpectedly, you know, that aren't in the calendar, and you have to deal with them if you're trading in real time or you're doing things live. Well, the 0.6176 would be the place where I'd be looking for a second opportunity, whether I'm long already or not. And the third and final thing, you can look for this to start to make its way down, and then you get the reversal intra-week. Back above the moving average, pulls back, retest, and then you get your, it doesn't even have to retest it, just kind of has to hug it. And then you get that opportunity for a bull flag into the prior high and the upper bound at 0.6385. So this is a great profit taking zone next week for any intra-week longs in CAD franc. And finally, we have Euro CAD. Now I like this pair as well because we have prior highs sitting right in the first kind of 25%, 30% of this sell zone. So if we start to pull back, you can look for a really nice range trade setup. We turn overbought during the week. We enter this sell zone between these two levels, and we take out probably either this high or both highs. And this is going to be where I'm going to start to look for buyers. You know, you're getting buyers coming in and maybe they're not looking. Maybe they're just zoomed in on a 5-minute time frame. They're not paying attention. You start to trade into these highs. They're trying to trade a breakout perhaps. And then what happens is, because of everything we've put together today, you start to see this market failing. It stalls out, and these buyers, they sell their positions. And that is the reversal, that kind of liquidation that we're looking for during the week. If we blast through here, whether I'm short already or not, the 1.1569 becomes the kind of emergency cost average position. But again, don't expect most weeks for these to happen unless you've got an interest rate decision like the BOJ on Friday, or CPI or something like that. And the third and final thing is EuroCAD. You can look for this to start to pull back. We've already had a correction off the low. So this is the kind of market that can go intra-week. And if you start to get that bear flag set up, as we see all the time in these markets throughout the week, you can see that this probably comes down to the prior low. The prior low sits right in the buy zone, but we don't want to step in and buy this with a new position. But if you're short and you start to trade into the buy zone and you take out this low, that's a great place to buy back what you've shorted, right? So it's still the buy zone, but you're not taking an initial position. It's just to buy back anything that you're short during the week. Okay, so wrapping up the video with gold and silver. Now, both gold and silver, I prefer to the short side next week. Why? Because you can see in gold, every time we push high, we sell off. Push high, we sell off. Push high, we're selling off. Why? Because the dollar's strong. When the dollar is strong, this is a headwind for gold. However, when you've got inflation, or sometimes you've got risk off, you can see the dollar and gold going up together, and silver tends to suffer anyway. So I prefer silver shorts out of gold and silver, but while we've got a strong dollar, while the dollar's pushing higher, I would prefer to be on the short side of gold just for the time being. As soon as the dollar turns, we're probably going to be starting to look for those buying opportunities in gold. So I do prefer, although it's not my favorite setup heading into next week, but I prefer on balance, we cover gold every week, I prefer on balance still gold to the short side. That means if we push higher and take out the 2760.46, this is where I'm going to begin to look. You know, are we starting to lack momentum? If we just blast through here with momentum, then I'm probably going to wait for a bull flag, look for another attempt to take out the high, maybe this high, and then I would start to look for the buyers to struggle, for a 1 or 2 day reversal. If we come all the way to the 2818.07, this means we've probably had a severe weakening in the dollar for whatever reason. This would be the second place. Whether I'm short already or not, I'd be looking for a 1 or 2 day reversal. And third and final thing is you can look for the intra-week breakout. Again, we've got this kind of Kiev resistance over here. If we push into it, maybe we just fell intra-week. You see the moving average turn, and that gives you that kind of bear flag setup. Profit taking target for any shorts would be at the 2645.25. Again, it's not my favorite setup, but on balance, that's what I would be keeping my eye out for next week in gold. And last but not least, we have silver. Now, silver has really struggled to gain any traction to the upside, and I have been looking at this to the short side. I've been saying anything that kind of pops higher, I would be looking to the short side. There haven't really been many opportunities in silver, but going into this week, if we do get a pullback again, very much like last week, and this is how I know silver didn't do much last week, because I had a very similar setup where the sell zone and the upper bound was sitting right at this double top breakout point. So just like last week, if we do get the market pulling back and we get a bit of volatility and we take out this prior low and we trade above the 31.56, now we've got confluence. Now we've got a stronger dollar, which should be weighing silver to the downside. Again, this is before Friday. We could see a weakening of the dollar on Friday if the BOJ hikes rates and the yen goes up. But before Friday, a stronger dollar should be suppressing the price of silver. If we trade into a prior broken support, turning resistance, that should be a headwind for any further upside in silver. And we trade above the 31.56. All of this sets up a nice potential reversal for 1 or 2 days to the downside in silver next week. If we blast through here, it means this kind of pattern to the downside is reversed because this is abnormal momentum. Whenever you take out these levels, it means something significant's happened, usually a trend change. In this case, I would still be looking for a 1 or 2 day liquidation to the downside, whether I was short already or not. And the third and final thing would be, again, that intra-week bear flag setup where you break down below the moving average, you pull back into it, you kind of tuck into it, and then you move away. Pull into it, move away. But the first one is usually the best one. And you could be looking down to the 29.14 is the profit taking target to the downside, but we have prior lows. What works on the upside works on the downside. This would be a great place at these prior lows in this buy zone or profit taking zone in the case of silver, because we're only looking to be short. It'd be a great place to book any profits in silver to the short side next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the Cutting Edge Hedge Dash trading app used in today's video by heading over to www.hedgedash.com. Access to the Cutting Edge Hedge Dash platform is included with every GMT membership.